Hello guys, so welcome back to my channel. Today I'm reviewing Gbpusd. Today we had a bearish movement. So today I'll talk about, if time allows, I'll talk about there's a brother who sent me a message. He wants to understand about when price is held up at a certain point and you have to wait until a decision is made. Basically, you have to wait until um, you are able to identify the trend, identify order flow, and basically you are able to see price action in the charts. So now, before I go to the lower time frame, I want you to see that on the daily, we have market structure break. All right. Structure broken to the downside. So what does it tell you? It means that the order flow is bearish on the daily time frame because we are breaking market structures. Swing lows are being taken out and price is returning to the area of origin where the move originated. However, something happened right here. If I highlight this order block, this is in the daily, you see this bullish candle that broke these highs right here. This is an order block, and that's why when price came back, price was held up, a decision has to be made, either price to go up and take out this swing high or price to go lower. Now, this was a bullish order block, and you can see for about 3 days, price was bullish. And then when we came back to the same point, however, this high failed to take out this swing high. As you can see, when price came back to this point, this is an area where a decision has to be made. Should we break this low and we continue lower? Now I'll switch to H4. All right. First of all, you can agree with me that this is an order block, a break of market structure. Price comes almost into it. Price did not touch the order block like this down candle before the up move. This imbalance was filled. Price came back into this order block. It went up. It failed to take out this swing high. Price came. Now price was held into consolidation right here. Now this is a decision point because we have this order block that has held price here, and price failed to take out this high. This blue horizontal line represents previous week's low, and this one previous week's high. And if I zoom in, I want to show you, this is the point where, right here, this is the point where previous week's, let me use this color. This is where previous week's low was taken out. And immediately, look at this. Immediately, price takes out and we went up. Okay. Now, when the price went up, we had a break in market structure here. Price came to this order block. So we have a bearish move. However, the bearish move has been held here where a decision has to be made. I want you to take note that when these candles closed below previous week's low, price came back up. We had this candle. Let me zoom in again. We had this candle right here, this candle closing below the horizontal line, and we had several attempts, price trying to go up to close above the horizontal line on H4, price failed. Can you see it? Until today we had the bearish move. There is no candle on H4 that closed above this horizontal line, because as I always emphasize in my videos, when buy side is taken, for instance, if this is to be taken, price will either touch it and continue higher, or we are going to expect a market maker sell model. It's taken out, price comes back in here. Now on the lower time frame, what are we going to be waiting for? Now there is a lady who sent me a message, and she wants to understand about the market maker models, because that is the simplest model that ICT teaches. And he emphasized, actually the whole mentorship for this year 2022 focuses mainly on the market maker models. All right, now ready, if you are listening, this is for you. I'll come back on this one. So if this buy side liquidity, this is your horizontal line, you are waiting for price to take it out. Now it wasn't taken out, but take for instance, these are H4 candles. This H4 candle closes above, or rather it doesn't even close up, takes this high out, and then it closes below. What you do on the lower time frame, and when I say lower time frame, I mean like M5, M15. Personally, I believe that M1 is a bit advanced, especially if you are a beginner, but you can try to do a practice on the demo, not a live market. Now, this is what you should expect. You will expect that in this procedure, okay, of a candle, by the way, let me do it the best way. Let's say this is a bullish candle. Let me use this color. We have a bullish candle. Now, imagine that this bullish candle on H4, okay, just wait, I'll show us what I mean. Okay, so now this green area, it's a bullish candle that has taken this buy side liquidity. Now the dark area that I have added represents H4 candle leaving a wick here and closes below this horizontal line. Did you get it? H4 candle goes up, it takes out this swing high, which is the buy side liquidity. Then there is a huge retracement on that candle and it closes below. If it is the daily, it should close below. If it closes below, then what you are gonna be looking for on the lower time frame, M15, M5, is a market maker sell model, which is we have high, this low, price, it takes it out, price comes back, and then let me draw it better, because you may not understand what it means. Let me do it this way. Okay, this, you understand it way better. So this is what you look for. On the lower time frame, now price is going to come back and it will take out this swing low. You wait. Now in here, you are going to look for your area of value. Let's say an order block or a fair value gap, FVG, imbalance, whichever you call it. Others call it inefficiency. It doesn't matter what you call it. Now, let's say you find a good order block in here. Because we are bearish, so the order block, it has to be green. You expect price to come in here and then to fall. And this is where you are going to make, your sales in here. Okay, so price closes below this area. On the lower time frame, you look for this kind of template. All right, so let me continue. I'll touch more on this later on, because in this video I have to explain many things, but because TradingView, I use TradingView for taking these videos, and they only allow up to 20 minutes. I don't know if there is another software I can use. So now, but I will come back on market maker models in the next videos. So now, today, we have a high of last week, a low of last week. These are odd lows, which are liquidity pools. So H4 touches this order block. There's a break in market structure, and then price goes down. Can you see that? Price goes down. And there is no candle on H4 that has closed above. This was liquidity grab, mitigation, and when we came back, several attempts and no candle closed above. But if you go to H1, only people who are a bit advanced would be able to survive this. So this is the same mitigation on H1. Now we have liquidity, price goes up, H1 candle closes above it, above the previous week low. Let me go to M. I like 45 minutes time frame. What do we see here? We see a huge order block. All right. A huge bearish order block. And what else do you see? How do you know this is an order block? We broke structure. Now I'll remove this. We broke structure. This is London in here. London comes here. New York opened on this candle. Now let me show you something. When we go to M15, if I was present in front of my computer, I could have caught this sell, but I had gone with friends I'd gone out with friends. So you look at this. When this candle went up with so much momentum, it was coming to mitigate this order block, that block structure. Now, this, let me do this for a clear view. Okay, just remember this is an order block and the break on the market structure. Now, this is smart money technique as ICT says it, and I'll show you. I'm going to add DXY, and I'm going to turn it into the line. I'll change to candles. All right, can you see this? So DXY made a low, broken, a lower low. This guy GU could not create a higher high. Actually, we made a low. Can you see the smart money divergence here? Okay, then if we go to M5, come on, yes, M5, can you see it? A low, a lower low, a high, and a low. Price had made a smart money divergence. But now, what I want to show you, I'll remove this. After this smart money divergence has been created, price makes a high, a low, a higher high. We fail to take out this high. We make a low right here, and price just closed where? Below the weekly low. I have some the session indicator, and you can see this is where New York opened. This color in here, this is New York, this is London and Asia. Now you see that price, after taking this low, we made a retest and no candle closed above the horizontal line. Now this is where you have to understand about timing. ICT talks about time and price. All right. If you did not get an entry during London session, during the first 2 hours of London session, then you have to wait for New York to open. You cannot be looking for setups from morning until I don't know when. You need to know your times of trading, what time your setups are created. So now, if you had made an entry on here, you could have caught over 100 pips. All right. So it's you to decide if my emphasis on liquidity being taken, and then the price level where liquidity was taken, it will act as support to support the price, or it will act as resistance, not the retail support and resistance, smart money support and resistance. So I've taken you from all the way from the daily up to 5 minutes. So the next video, I will talk about market maker models. So go back, test this video, watch it as many times as you can. All right.